Welcome to the practical application for our hammer candles. We will go into the chart in a few seconds. We will go into the TradeStation and looking for real trade setups. Okay, I think that's very helpful. On the previous session, we talked a lot about the theory about the hammer candle, right? And now let's check how to trade these guys. Yes, let me this smaller here. We will go into the chart. Here, 1 second, give me. Yes, perfect. First, we will always start with the key takeaways, hammer candles. Okay, that means position. We are looking for a hammer candle in a correct position. Okay, let's check here again, guys. This here is Apple. Let me open the weekly chart, and that's the same sample in the theory, right? In the slides here, look at this. We have two hammer candles. Let's choose the last one here. I will work with the snap mode here for you guys. Second, we will remove this one, gray. Set as default. Okay, perfect. So snap mode. This is our hammer candle here. Open this one here. First step is the position, right? We need the hammer candle in the lower low or in the higher low. Let's make together here our direction. Drop. Oops, that's snap mode off, right? Drop like this. So we have a clear downtrend, right, with highs and lower lows, higher lows, lower lows, and lower highs and lower lows, a clear downtrend here, and we are definitely in the lower low area. Let's open this one again and look, position typical occur after a price decline. We got weakness, right? And then must be on the lower low, and it's in the lower low area, or higher low, but here lower low is the key. Good, perfect. Tick in the box. The wick. Let's check the hammer candle here. Right, the wick, the lower wick should be at least 2 times the height of the real body. Very easy here to see, right? This is snap mode on. This is 1, means this is maybe 2. We have a longer wick to the downside. Very easy, also a tick in the box. Next one is the structure. Right, the close can be above or below the opening price. Also, the close should be near to the open for the real body of the candlestick to remain small. Look, it is a clear hammer candle, right? The body is above, it's red, it's very small. The close, wait, this is a opening, and this one is the close. Very easy. It's very close to each other. A nice small body, and there's also close to the top, means that looks like a real hammer. Perfect. We open this one, and now the next one is the buy action, right? We will go into our steps 1, 2, 3, how to trade this one here. Let me open this one here. Yes, it makes sense. The next step is we go to the take action slide, option number 1. First, hammer candle key takeaways must be met. Perfect, done. As soon as the hammer candle is completed in respective time frame, we mark the hammer candle high and low. Let's do this together. Here, the high is 130.90 and the low is 124.17. Perfect. Also high and low marked. And it's also done. Okay, means, right, we're talking about the Monday here, the beginning of the week, and then we can mark the highs and the lows. Step number 3, the entry long order is set slightly higher than the high to avoid possible fake outs. Okay, that is so easy. That means, okay, you can use a horizontal line if you want. I will use here my Fibonacci tool. That means, okay, I will move my entry a little bit higher, right? Slightly higher above the high. You have 130 here, for example. I will go with 131.31. That's fine. This will be my entry. This is green. And I need a stop loss also. Here, my stop loss is, for example, here. That means my entry is above the high. The high is 130.90. I will move my entry a little bit higher because I want to avoid fake outs, right? Means my entry is now 131.31. And then my stop loss is 33%. Here, guys, it's not right, not wrong, right? You can use also 10%, 50%, 100% if you want. That depends on your trading strategy or your trade plan. Okay, great. That's it, right? That is the option number 1. Here, stop loss, yeah, we use 33% for the stop loss here. That's it. And then look, if we wait, let me check. Means that was our job on Friday evening, for example, for Friday night, or if you're still waiting for that's really completed, Monday morning, right? If you make this in the Monday morning, then wait for the breakout, right? You mark on Monday morning, you set your entry here 131.31, and then you still waiting to be filled. That means, I don't know, at 6, 7, 8, 9, 10 a.m. in the morning, you got the breakout, right? You're filled, and then you can enjoy the wave. That is option number 1. And now we will include also the key takeaways for the indicators to increase your probability, right? And here, that's it. We will start with the seasonality. Current price located in the buying point. Look at this here, right? We talked about it, 8 years seasonality. We can use the 8 years here, for example. Also 10, 20, 15, 2, 3, 4 years. Everything is correct, right? Depends on your own trading strategy. Let's check the seasonality here together. Okay, it is let me check. It is the 7th of January. Yes. First months, then the dates. Tricky for me as a German. 7th of January. Okay, let's go. This is a daily chart here, right? Seasonality is always daily. 7th of January. 4, 5, 6, 7. That's here. That's here. You see, the green line is for me the current price, Apple price, and the blue and the gray are the prediction, the seasonality price, a prediction. The gray line means the 8 years here. The blue line means the 20 years. And let's check this together here. The 8 years, it is a clear buying point, right? Oh, it's not so nice. I will stay here with this one. This is a clear buying point on 8 years. You see prices decline is weak, and then you got nice strengths, right? And the same here also on 20 years. This is also a nice buying point. Perfect. It has not to be matched that you have 8, 20, 15, 10 years. All of this are buying points, right? Maybe one is enough, maybe 5 years is enough, not right or wrong. If you found a nice buying entry, a buying point, then use it in a seasonality chart. Why not? And here, yes, a clear entry. It makes absolutely sense to buy here. The next one is the valuation. The valuation. And here, specific valuation asset located in the bullish area for the long or bearish area for short, but we are looking, of course, for long here. Hammer candle is a bullish reversal. And here, for example, we use gold and the US Treasuries in the slide. Let's go here into our valuation, and here that is our valuation. I will change this here. I will go with gold, with the treasuries, with gold, but also with the US dollar. Okay, that means I have also to go here true, everything on true. And then the 7th of January, that was our entry. 7, 5, 6, 7. Okay, see here, that was the 7th of January. That is our date of the hammer candle, right? And then let's check what tells us the valuation tool. And valuation here is not in the bullish area, right? This is a bullish area here below the -75. This is a bearish area above the 75. We are not in the bullish area. We are coming from the bullish area. That is fine, but we are not in a bullish area. And this is real trading, guys. We have not, you know them, yes, you're watching the price action course. That means you have and you need definitely trading experience. Okay, please watch the price action course after you have experience, right? That you have real trades, and that is trading. Not we have not a 10 of a 10. We have not all the box, not all tick in the boxes. Okay, we have sometimes own from 10 from if you have 10 informations here, maybe sometimes 7 are in line. Here, look, not gold, not the treasuries, not the US dollar is in against the Apple here is in the bullish area. Okay, it means here it make no sense. Let's change a little bit. For example, at S&P and also Nasdaq, okay, and Q. Reference 1 and 2 means 1 and 2 is yellow. Okay, it's not changed. We'll find a way. Give us a second. Wait. Inputs. We'll only first one and this on false. Okay. Good. And what that means here, right? We was super close here to the bullish area in the extremes, right? In the extreme. Also here, the 75 is not correct. It's correct, but it's not right or wrong. If you choose, you can change also, right? The lines, the 75% here. Look at this, the upper and the lower. You can go to 80%, 50% on you. That tells you only the extremes. And here we are not in the extremes, but we was definitely a day before, right? 6th of January. We was super close. We was super close with the S&P to the extremes. Okay, that means okay, valuation is maybe not 100% in line, but maybe 90%. Okay, that is the idea here. Okay, I hope you understood. We have all the hammer candle key takeaways aligned. We have the seasonality buying point. You have the valuation, and here, for example, the S&P close to the extremes, right? And here you have to back test. What is really nice? Oh no, that's a no, that is a indicator course, not my. That's not my job here. Good. That's it. Here for the Apple valuation. The next one is we will go. Yeah, COT make no sense here right now, right? COT is futures only. Upsala. Is futures only. The next sample will be a future, then we include also the COT. But of course, this would be, for example, this would be the S&P 500, right? We want to buy, then we need the COT for here, for the commercials, definitely in the bullish area, because that's our job. We want to do the same, what like the institutions will do with the commercials. The next step is the trading day of the month. So you will check this buying point here with the trading day of the month. Okay, let's go to our hammer candle here. And let's check now the trading day of the month. Or wait, let's go to the daily chart again. That make more sense. Small. Okay, that is the 7th of January. That means that was our buying opportunity, right? This is like this here is our snap mode. This is our hammer candle here. Let me check very quick to use the snap mode correctly. Yes, snap mode. Like this. This would be our hammer candle. Okay. Oops. Okay, now let's check the trading day of the month. Trading day. Bullish or bearish trading days of the month. At best, a cluster of several days to stay in the trade, of course, right? The best of the best is that we have after the creation, after the 7th of January, we will get a bullish days, right? A bullish days or also a cluster to expect more strength. Let's check here. I screenshotted the trading day of the month for Apple. Look at this. And the 7th of January was 4th of January. Okay, that means here we will start with this date. This is that was the Friday. Okay. And you see here, the Friday was a bullish day. That make on 5 years, right? That is M1 means January. P1 is the 5 years. That is February 5 years. That is January 10 years. That is February 10 years. This is January 15 years, and here's January. This is February 15 years. Concentration of this one here. You see, we will use this here for this sample. This was our trading day, right? And that was a buying point. Great, but this is Friday. Okay, that was Friday. Wait a second. Yes, this was Friday. That means, yes, of course, we need a bullish day on Friday to create a bullish a hammer candle, right? That your close, again, the close should be the opening very high, right? That should be what we want to create a hammer candle. Nice. Okay, but then we need after the 7th, the 4th trading day, we need buying power. Okay, and let me open this one. Look, the 5th, this was not a nice buying point. And look at this, we will go here one day later. That is, I know this is, oops, that is not that is a 10th, right? The 10th of January, but the 5th trading day. And that was also weak. And that was very clear here on the seasonality, right? It was on 5 years weak, on 10 years weak, on 15 years weak. Okay, that means that is a nice entry point, because if we expect weakness, okay, that's perfect. That means we will get maybe a better entry. Okay. And then look, the 6, that means 1 day later here, 1 day later. This should be the 6th of January. This should be a buying date, 60% probability. Okay, 60% probability, and also on 5 and 10 and 15 years. That's really, really nice. That means you have to be, you have to enter the market definitely on the 6th of January, because this is the first buying point. And then look at this, the 6, the 7, the 8, and the 9s are super strong buying dates on 5 years. Longer on, oh no, sorry, that's not. On 5 years, these are super nice buying points. It's a rally. That means 1, 2, 3, 4 days very strong. 1, 2, 3, 4. Very, very strong. Should be to enter here. Definitely. And that means, okay, we expect, right? We have seasonalities in line, valuation also, the S&P, for example, is nice. And then the trading day of the month, okay, I expect strengths here. I have a cluster, right? Also 1 day is enough. 1 day is also okay, right? But here you have a cluster. That means, okay, we expect more strengths. And then look at this. We have 2 weakness days, or not really strong, and then more strengths. And that is trading, right? That is impulse correction. It is always the same. And that means your probability increased, right? Seasonality is in line. You have a clear cluster of buying points. Also 1 day is also fine. You have your entry is your hammer candle is in the lower low. Perfect. Everything is in line. And that's it. That is trading with that's price action trading with the hammer candle, right? With also the indicators. Of course, it is an additional, right? It is additional information for all of this. We need also sometimes weekly supply and demand. And let's check here our weekly. If we check weekly, we create this hammer candle here. We will go to the left and look at this. All of this is here, demand to the left side, right? Perfect. That means we have a demand, we have a lower low, we have a hammer candle in demand. It's all of this additional information, and that's if you have more of this tick in the boxes, then your probability increased. That's really, really nice. And then profit margin, of course, you can stay into the trade till here. That's the next big selling point, the 16th of February. Let's check where it is. Yeah, let's go here. 16th of February. That's here, right? This, you can stay in the trade till this date here, for example, and look how much money you made with it, right? It is with the option number 1, it's 1, 2, more than 3 hours, very easy. Or of course, you're looking for supply, right? Where is the next supply? Weekly worth nothing. Let's check here. Maybe we have here supply. Also not really. No supply. Good. That's it. That is option number 1. Okay. Let's go to option number 2. Give me a second. Okay. That's option number 1. Again, reward is less. Of course, maybe the less, right? That's what I mean. It's less. Yes, depends on what. Only the size, right? Sometimes you will get a really nice or not a really nice, a really big zone. Look at this, right? Your entry is 131, it's $10. It's like a $10 zone, right? That means it is less. But here, example, if you stay in the trade with the seasonality, you could stay in the trade till the 7th of February. That means you made easily a 3-to-1. Okay, that's great. Trigger probability, of course, the best of the best, very easy to be filled, right? Here, your entry is above the horizontal, the proximal line, the hammer candle, and protection, one of the best. It is below of the hammer candle, correct? That was option number 1. Let's go to option number 2. Okay, and this, remember guys, we talked about it here at option number 2. It's only different here for the entry. Again, hammer candle takeaways must be met. Done. The same like before. Same here. Hammer candle is completed in respective time frame. We mark the hammer candle high and low. Let me remove this one. That is our high and the lows. And then the entry long order can be made market or as a set within entire range of hammer candle. And this is the point here. We want to buy, you will go to daily here, okay? Daily is easy. This here, let me check, 130.9, yes, 124.17. Yes, exactly. This is exactly our hammer candle range. Okay. And bye. That's our range. That means, okay, this was our trigger here. If you trade option number 1, for example, without the trading day of the month, that was your trigger. If we are long above the horizon or proximal line, you're filled. Great. But now let's check. We want to buy, for example, in the range here, within the range. But how, right? The first step is always which one I have to choose, or which option I have to choose is depends on profit margin. Here, for example, I had a 3-to-1, but the 3-to-1 was not possible for me to calculate because, yes, I know, or I knew I could stay in the trade with the seasonality till the 17th, till the 16 of February, fine. But I never know how much will rally the stock. I don't know, right? We don't can say don't can say okay, it is a price will rally every day $5. It's not possible, right? That means okay, I don't know my profit margin here, and if this zone here too big, right? Where's my next supply zone? I have no supply here. Means okay, I can stay in the straight, but for any reasons, this zone is too big for me. I want to buy in the range here, maybe 128, 127, 126. Okay, you can move your entry line here, for example. Yes, let me change this one to green. 100% means it's green. Boom. It means we can change. 1 second. Give me a second. It's better for you. 33%. Where is it? Okay. Great. Okay. That means snap mode here. Okay, gray lines are highs and lows from the hammer candle. Depends here, we are on a lower time frame. And now we want to enter like option 2, right? We want to find an entry in the range here. Okay, anyway, in the range here. How we make this? How we make this? Of course, we can calculate our risk to reward. If we want, for example, this look here, for example, like supply for you, okay? Or like this one here, this is supply, and you need a minimum of 3 hours, okay? You need a minimum of 3 hours for your trade plan. Let me add 3 hours. That is 4. So, That means this is here. Oh, let me check. Yes, this is 2 Rs, okay? The 149 are 2 Rs here. This is 4 Rs, it means here this is 3. And you need 3 Rs, okay? 3 Rs. That means you will never arrive, for we have the supply, for example, here, you're 3 to 1. What we're gonna do is, we will move our entry like this, like this, like this, like this, till our 2 Rs, 3 Rs, sorry, that's here in the middle, right? From 2 and 4, the magenta lines are in line on the same price like our supply. This is a 3 to 1 for you. That means, okay, you have to move your entry like this, 127.63 with a 33% stop loss below, to get a 3 to 1. That's fine. Or maybe, right, that's possible. Or maybe we will use the trading day of the month. Right, trading day of the month told us, wait, 7th. Here it was a 4th of trading day, told us, okay, we have the 4th here. The 4th is very strong. Yes, that's correct. And then we have a weekday, and then the 6th is really nice, right? The 6th is the buying date. That means the 6 trading days, 4, 5, 6, this one. This is our buying opportunity. That means wait for this date here. I will remove this green line. Okay, we're talking about this candle. It's also a hammer candle, but not on the right position. That means wait for this date here, for the trading day of the month. Look where we are. And for example, here, look, we was super low. We were super deep in the area. Right? That means, okay, market, maybe if you're in front of your screen and we are dropping, right, and you see, oh my goodness, we are close to 50%. I could decrease my full range of the zone here like to 50% because I expect a weakness day, and then after that strength, buy the Apple in the range here. That means, right, if we're dropping, buy here, buy here, buy here, buy here, up to you, right? Up to you. And then enjoy the wave. Here you can increase your profit margin, right? If you bought it, for example, here on the range here, yeah, you have a little bit more like a 2 to 1. But this is definitely more than option number 1, right? Option number 1, you have like a little bit more than 1 R. Here, if you bought it like this in the range here of this candle, you have more like 2 Rs. That's the reason why we have these different options. Okay, that is option number 2. I hope also clear. And now option number 3. And what is option number 3? It is the entry. That's important here. The order can be made market or as I said within entire range of the hammer candle, but here on the lower time frame, right? This is the part we want to talk about, the lower time frame. And here, let's go. That will be nice. Let me remove this one and this one. This one, it's our range here. We will go into a lower time frame. Yeah, let's choose this one. Why not? Maybe here we will go. You can start with 120, with 240, with 480. Okay, up to you. 60 minutes. I'll choose here, for example, 60 minutes. Okay, not right or not wrong. This is a full range of our weekly hammer candle, the highs and the lows, right? Remember what we have to do is first, hammer candle key takeaways must be met, right? And then mark the hammer candle's highs and lows. Great. Okay, that's our lows. And then our job is on the lower time frame, 60 minutes here, for example, where is our first second, third demand zones, right? And where's our demand? It is, wait, let me hit snap mode. Demand. Demand. Okay, we have two demand zones here. Okay, that means we have to choose. And here, don't forget, trigger probability is like 50%. Why? Because it is not necessary, right, that we come back. Sometimes, or we'll hit also a demand zone. Sometimes we will see a rally without us. And here, for example, we have two zones. And if you choose the first one, the first demand zone, congratulations. Really good job. It is a rally-based rally. Look, we got a confirmation. That's not necessary. But then we got lower back into demand, the 128 area, and then a rally. That means green. And that means this could be your entry. Okay, this could be your entry. Let me go back to weekly here. And remember, guys, our option number one, our entry was above the 130 and below the 124. Okay, the option number two was, we go to daily. Option number two was here around the 128, maybe the same entry, but the stop loss below of the 124, below the hammer candle. And now, look at this. I will go. Look at this. How small is your profit? How small is your zone right now? It is a 60-minute demand zone with an entry here, 128, and a stop loss. Only 33% here, for example, below the lower time frame. Here, right, below the lower time frame zone, that's possible. It's also possible that you move your stop loss here also below the hammer candle. Depends on you, right? Depends on profit margin, depends on your trading experience, trading plan. And look how much money, or how big is your reward now? 2, 4, 6, 8. Boom. That means, and your first, I think here around this area was your supply. Oh, let's go. No, sorry. Here was this supply. Very easy. This is your next supply. Should be maybe your target, right? And with the option number one, we have around the 1R. We made 1R. With option number two, a little bit more than 2Rs. With option number three, we made 2, 4, 6, 8. I think we can double sizes. You made 16 Rs. Okay, that is the point. Yes, that is the point. Let me go to 60-minute again, because we have to talk about one more here. It's very important. So it means you had 16 hours, and that's the reason why we talked about it in the slides here. The reward is definitely better, right? It's definitely better than the other one. It's like 75%, really, really, really nice. Yes, let's go here. That this was the first demand, and here that's the point. If you choose not the first one, you choose, for example, the second zone, because you have a rule. It's like a level on top of level. It looks better for you, right? Here, this would be your entry. That's a demand zone, the 128.04. Let me change this to our entry. 100 is green, and we need to stop loss. That means this is our entry here. We are never filled with this one, right? We are never filled, and that is the point. That's the difference here. Let's go back. Yes, that's the point. Look, trigger probability is like 50%. It's not the best, but here I think you would be filled because here it is the same. We will move our entry also a little bit higher, right? Always, that's what I do always, because we have a spread. A little bit higher here, maybe you are filled. Depends on the spread. I don't know. It's possible, right? But if not, then you're not filled. And that's the reason if you the difference if you're using option number 3. Sometimes you will be not filled. It's possible to increase. It's possible to increase your profit margin to the extremes. It's also possible that you are never filled. Yes, you can use also here the trading day of the month, right? You can check this a little bit. Okay, when it's best trading day and wait, and then look where you are. Okay, but that is the difference here. Let me go back to daily. Guys, that's it. That was the full hammer candle price action course with option number 2. What option number number 1, number 2, and number 3? Sorry. I hope you could enjoy this session here. It was helpful for you. I think also very helpful for the advanced traders, because I include here all the indicators. The next one will be the bullish engulfing, and here I will use the an asset like a future asset to show you also to include the COT. Good, that's it, guys. Next one is the bullish engulfing.